Hello and welcome to Macro Mondays here on Landy's Crypto Corner. Today is November 11th, 2024, and we're looking at Bitcoin as usual. And we are on the longer term time frames because we did get a very important closure, one that I talked about on Saturday to look for on Sunday. And we have seen that, and we have seen Bitcoin move to a key level overhead above some of the areas that we talked about on Saturday. So Bitcoin did get a closure above the upper second standard deviation on the weekly here. Now that has moved up substantially because Bitcoin not only closed above the upper second, but also the upper third, with the actual close coming in at 80,428. So just around 80,500. And we see that that is where the upper second standard deviation is now. And to be quite honest, as long as Bitcoin is closing above here, that's continued expansion to the upside on the weekly time frame. Looks very, very strong right now. At worst, I wouldn't want to see Bitcoin closing back below. This is from an expansive point of view. I wouldn't want to see it closing back below around 72.5 right now by the upper first standard deviation. Moves back down there that do not close below there would preserve the upside expansion. We preferably want to see continuation above the upper second, right around 80,000 to 80,500 or so. That is going to be the preferential move. Obviously, we don't want to see this week's candle close back below its open. And but yeah, wicks in between now and Sunday can land kind of anywhere. You see the last higher low on the weekly is still down here at 58,863 with that 62,800 rather close open on the last weekly higher low. So things are looking good. The basis band is above there and even starting to get into some of the top side resistance areas at $65,000. Looks very good as well. So this is just the etchings of this particular move. You can see that reflected in BBWP volatility down here. And we exponentially increase volatility on closes above the upper second and especially above the upper third, which is why we saw a significant jump in the BBWP volatility metric. Now, for the weekly, we do need to be aware of some of the key areas here. You know, I'm not going to call out support and resistance right now. We're going to talk about these things in just a moment, but we had the nice consolidation, nice little move up above our simple moving average here. I did want to call out, the upper end of RSI on the weekly really quick. I do think it's important to understand where that is. So the extreme read is the 85 read here, and that would be the critical, not the user alert, which is up here in the yellow. But we do want to see where the critical zone is. That's at 134,000. And to exit the bullish control zone, that's below the $76,000 area. So that would be closing back below here. So on closes below $76,000, that's where we would see Bitcoin breaking down from the bullish control zone of RSI. Looks really good right now. And, I'm interested to see how this number updates for the critical zone overhead. I'm curious where the user alert level is at $150,000. So you might remember I've talked about some of the areas overhead. For Bitcoin, we talked about 73 to 75 is the zone. We saw an initial rejection of 75 and then a move above where the zone was 75 to 78. Saw an initial rejection at 78. Then it moved above 78 to 80. So a little bit of resistance at 80, and then it moved on through and started hitting our mid to low 80s, and now has pushed through to an area that I called out on Saturday in some previous videos as well at around 88, almost $90,000. So that's going to be kind of the criteria that we're looking at here for this week and possibly next week if Bitcoin stays up here on the highs, especially above $80,000 or so. Now, for momentum, we see a regular Stochh, not a Stochh RSI. This is just a simple regular Stochh that measures close over close price momentum, not the velocity or speed of RSI. We already looked at RSI, so I don't need a derivative indicator of that. In this case, we can see back below $77,000 is where this would turn back down on the weekly. Looks very healthy right now with Bitcoin trading nearly $10,000 above it. Again, we're going to check on this on Wednesday and, of course, on Friday to see where things kind of end up by the close of the week for traditional markets, and then something to look out for, or things to look out for over the weekend coming up. But, everything looks very, very good. We'll take a look at our monthly here, and we can see that, yes, as I mentioned, Bitcoin did, hit the upper second here. It was previously in the low $80,000 area, around $83,000, almost $84,000. It has stretched out to about 86, so 85 to 86. Closes above here by the end of the month. Going to look really good to go and run the upper third standard deviation, which has now started to creep up above the upper third, or the upper third is now creeped up above $100,000 even. So there is some areas to be aware of up there in terms of Fibonacci levels, but ballpark 100 to 105. There's like a major fib level. I think it's the 1414 or 1272. I'll have to double check. I think it's the 1272 is right around $103,000. So that's off of this particular Fibonacci level. Let's go ahead and get that up. Yep. Yeah. So from the bear market, yeah, we see that the upper second is right here at the 1.168. I know I was catching flack for this for a little bit. Like, why do you even have that? That's so goofy. It's for shorter term timeframes as it relates to the macro structure. And it works out pretty well. You see the upper second is basically right on it at around that, $86,000 to $87,000, almost 88 here for the actual price heading into that 1.168. Above there, we have the upper third where the 1272 is at around $103,000, almost $103,650 or so. And we always see Bitcoin when it's actually ready for the run. Well, Landy, it's running right now. Yes, it is. But the actual expansive run occurs on closes on the monthly above the upper second. And guess what? The upper third as well. So we do still need to exercise caution because we did see previous closures above the upper second and two closures, or at least one really good closure outside of that upper third that initiated expansion. You see the bands dropping off the screen here, and we've just now come back up into a bit of a compression phase while Bitcoin is holding on to the upper first, by the way, which is where we want to see price holding up, around that 68,500 upper first area. I would just say the prior cycle high, $69,000 is probably the best one to track in that regard on any retest below some of the areas we just talked about prior. But, this is now looking for re-expansion on any closes above the upper first again. And of course, aggressive re-expansion of the Bollinger Band set on the monthly above the upper second. And I would be looking for price to trend up to the upper third. Closes above there, we're looking for much deeper price action into the 130 to 150. We just looked at that on the weekly as some critical zones at 130 to 150, which just so happens to be the 1414. And there's some other fibs that we can pull to play around with that $150,000 level. There are some fibs, I believe, locally that get into that area that are major fibs. And then above there, the 173 at the 1618 is one that I'm eyeballing. That's where we saw the closes on the market kind of fail last cycle, was in the 1.618 off of the 2018 bear market fib pull and extensions. So, it is something to keep track of. There's many ways to pull fibs. There's other fibs that we will be pulling for confluence along with our bands here. Let's go ahead and check on just this weekly. Like, look at how clean this is. This is just beautiful. Right into the fib level, getting a little bit of a wick through it. And then we do want to see this closing above. And to be honest, the way that this weekly is looking, if it does start to break like, $88,000 to $90,000, the next big area is $100,000 and just slightly above. On swings, I wouldn't be surprised if $100,000, you're going to see a lot of profit taking. Made $80,000. We saw quite a bit of profit taking when it started to get there in the lower term timeframes, but that quickly subsided. I mean, it was really only like 2,400 coins across the inflows. So that quickly got wiped out by buyers, and prices now moved up. And that's exactly what we want to see. This is now going to be pertinent on the daily. Daily is looking beautiful. I will say that the read is starting to get extreme for momentum, but we don't have a high yet. So until we see a high, that's when we can start referencing momentum as being actionable. And, there's some levels to be aware of on the daily here. When looking at the upper first standard deviation, we can see that that's around 79.5. Bitcoin can pull back down below here, but I wouldn't want to see it, for instance, in today's candle closing anywhere below the Monday open, which is at 80,500. So above there, again, just like we looked at on the weekly, looks good. And of course, just for reference, that 80,500 is going to be right at the upper second standard deviation on the weekly. So now you know where it is on the daily. That is a key level to hold coming into the weekly close. And I would just keep an eye on that if we don't see continuation past like $90,000 and things start to pull back. Closes back below the upper first, are going to start to give us, upper second rather, at 85,600. Probably going to start to look like it wants to come down and test around $80,000 to this 79.4 to 5 area. But again, there's if it's going to do a retest, which it kind of did a little bit of a back test on the daily here, kind of dancing around the highs here for a couple days last week before getting its continuation through the actual weekend, that nice Sunday into Monday pump. But, an official retest of like the 73 to 75 zone is not out of the question. Again, we see the daily basis band right around $73,000. So, if price did put in a high and come back down there, fine. It's great. No worries there. We are out of in-trend bearish divergence territory now. So I would not be looking for a full-on reversal of any sort, even if things did get pretty volatile to the downside. As long as, we're seeing Bitcoin trade and close above 66,800 or so, right around this lower first. And quite honestly, with a BBWP read like this, let's go back and look at BBWP. It looks pretty dang good. I'd say this move isn't over quite yet. There is some space between the moving average and the BBWP read. Let's go to the 2-day just to see where we're at. We're probably hitting some pretty extreme reads. Yeah, so the 2 days suggesting continuation of this move to the upside. 3 days saying we're just getting rolling. 4 days like, yep, we're just rolling. 5 day, yep. And weekly is like, fuck yeah, bro. We're ready to rock and roll. 2 weeks going to be the same thing off of a very low level. This is going to be a very big move on longer term time frames. 3 week is loading, and the 3 week is not closing for a little while. We got about 20 days. It just got its close open. 4 weeks not even ready yet, and monthly is not even ready yet. So we're headed up, and we haven't even really seen the volatility metric tell us that it's ready for its massive expansive phase yet on timeframes like the monthly. So, and again, that's reflected in Bitcoin being right around its upper second standard deviation currently. It still needs to close above there and the upper third. So, that's something that we want to watch the rest of this month, headed into December, and of course the first quarter of next year. Be aware that if it does reject around $85,000 to $100,000 and come back down, I don't think it's going to be over, but it will be likely a little bit of a long form accumulation relative to these higher term time frames. So we're just kind of getting some really good excitement off of in the markets, off of some technicals, but also off of obviously the election results. So looks good. I love expansion. Looks very good. We can get volatile moves back down as long as it's a higher low structure, which it's as long as it's above 66,800. Looking great. It's trading just a little bit above there. So it's almost $68,000 or it's $88,000 versus 68. So looks pretty good. I don't foresee a scenario, although weirder things have happened, where it would come all the way back down and take out that low. Then we'd have to entertain lower highs and possibly a structure change on the daily. Not worried about that right now, to be honest with you. But we'll keep track of everything. Until we see a high put in, it's up and to the right, by the way. So all the targets overhead pretty well defined, above 88 to 90. Yeah, there's some areas of interest in like the $95,000 area. If we were just to pull a fib locally, by the way, and we look at the extensions from, the high to low of the big old consolidation here, we can see key level that Bitcoin is trying to hold on to is the 1414 of this kind of a fib pull. Next big area is the 1618 at $95,000. And then guess what? 1786 coming into a very confluent zone between the 1786 and the 1888, right around and just above $100,000 at 101, almost 101, almost 102. And the 1888 around 106. We've got the 2 spot up there at 111. And then, of course, you start getting into those confluent targets around 125 to 131, which we have our $128,000 target up there as well. So, we can use this as a base. If you want to take the whole high or low structure from here, and you just want to like fib the pullback zones of interest, you can do that. That is valid to do. And there's two ways you can do it. You can take the whole move off of the high or low down here, and ignore this little bit of a downtrend in between, or you can take it off the 58.8 quarterly and up if you want, because that's, we had a little bit of a downtrend into that quarterly level. That was a prior cycle quarterly closing all-time high, not the all-time high at 69K, but you can do either or. So if you're really looking like this way here, above 73, hey, guess what? That's where the basis band is. Perfectly fine. If it was to return to the 618, at worst, you want to see it holding above the 50% fib at 60,630, which, if you're going to extend left, is going to be right around this close open structure here. So it's lining up with support and resistance. You'll see this quite often, by the way, when you're doing these yourself, or you can pull it from this guy here and you can get some more aggressive pullback targets for lower term timeframes. And you can see, again, mid $90,000 region. Once we start seeing price close above 88 to 90, we're looking, mid to low 90s, and then above the 1.168 in this case, which is pretty confluent, a little bit above the midway point of $90,000, but we see 100K and then 106 again, kind of off of the same type of a structure here. So we're getting confluent zones with the areas that we were talking about on the longer term timeframes and that bear market fib pull. So we're getting kind of more refinement as we go. And we need to watch basically the upper second and like this 888, which is at 85,000 or 85.5, and close above there. We're going to keep expanding to the upside in terms of potential price volatility. And of course, as it stands right now, closing above $80,000, essentially 80,002 to 300 or so. It's, it's up and away. Now we'll revisit this. We'll see how the Tuesday candle goes. We'll talk about it on Wednesday. If it's a red candle, then wherever the low is, if it closes below there, that's when we're going to see the high. Again, it's out of bearish divergence territory on the daily. And I like to see multiple drives of bearish divergence to see, to start looking for like any kind of daily reversals. Pullbacks are normal. High volatility pullbacks are normal. So don't get scared if you see price dumping. It's not over until we see structure break. And we just saw a structure break in a bullish way. So retest perfectly fine. And that's a little bit different than what I've been showing you prior. We will bring back support and resistance areas of interest once we start getting some 12-hour areas of interest that are worth talking about. I want to see some swings, right? The last 12-hour swing was at 72.5 to 73 basically. So that's still going to be relevant, but that's in our support and resistance zones already that I will bring back up on Wednesday. But once we start seeing structure build here or higher, then we can start looking at identifying zones of interest to the upside outside of volatility and Fibonacci levels of interest. So yeah, let's go ahead and just wrap up the daily here, and I'm going to let you go. We've got, the high volatility environment. It's fine. Daily is going to remain pointed to the upside on in the extreme read here for volatility metrics like a regular Stoke. Pivot's going to be 87, 630, 625. It's kind of moving around. So basically a little over 87.5 is where we would want to see closes to maintain upside momentum in the extreme area here. But quite honestly, it looks good. Even if this does turn down, I'm foreseeing a bullish reset in the future. Sorry, I had to cough. Sorry about the few seconds of silence there, but let's wrap this up. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, as always, stay safe. With all of that being said, Landy out. Talk to you on Wednesday. Take care.